And good afternoon. This is the Elliott Wave weekly update for the S&P 500 being recorded on Friday, August the 15th at 3:30 p.m. Pacific Daylight Time. Um, Nothing yet. I've not read or seen anything coming out regarding the summit between uh, President Trump and Vladimir Putin. And I'm now just taking another quick look to see, but I don't see anything coming out just yet. So let's get started. Now, if you are new to my work, I'm going to start on my maximum monthly chart, which it covers all the data that is available to me via the Thinkorswim platform. And on the SPX, the cash market in the S&P, it goes back to 1928. So I also, and my degrees, I start as R.N. Elliott laid them out with the grand supercycle, and then the supercycle, cycle, primary, intermediate, minor, minuette, and then sub-minuette and then that's the color key. So just to go over that big picture, we have grand supercycle wave 1 completing in October of 1929. Grand supercycle wave 2 completing in September of 1932. From there, we're in a grand supercycle wave 3, and it'll consist of 5 waves of supercycle degree, of which 1 and 2 are complete. And so from there, we are in supercycle wave 3 of grand supercycle wave 3. So as Elliott would call it, a 3 of 3 move. And then what will be inside a supercycle wave 3 will be 5 waves of cycle degree, of which we have 1 and 2. So we're in cycle wave 3 of supercycle wave 3 of grand supercycle wave 3. So now we're in a 3 of 3 of 3 move. That's producing a pretty powerful rally. In fact, as we entered into cycle wave 3, it becomes the most powerful part of the overall rally phase. Now, within cycle wave 3, we should find 5 waves of primary degree, of which we have 1, 2, 3, and 4 complete, which puts us in primary wave 5 of cycle wave 3. Now, moving up from there, what's going to be in that primary wave 5? And I can come down right to my 5-year weekly chart. And well, actually, I need to just go back to my monthly. What's going to be in primary wave 5 are 5 waves of intermediate degree. So you can see as we just follow this key, we're just going down in a degree, starting with the largest, the next, and all the way down. Now we're on to the intermediate. And within the primary wave 5, there will be 5 waves of intermediate degree, which again, 1, 2, 3, and 4 are complete. Now I can drop down to my 5-year weekly chart, and there's intermediate 3, here's intermediate wave 4. So what's going to be inside intermediate wave 5? 5 waves of minor degree, of which 1, 2, 3, and 4 are complete. Now, why do I keep doing it this way? Because I'm trying to demonstrate how close we are to finishing that, and go back out to my maximum, that cycle wave 3. So within cycle wave 3, we are in minor wave 5 of intermediate wave 5 of primary wave 5 of cycle wave 3. So we are very close to finishing that. Now I'm going to come all the way down to my daily chart. There we have minor wave 3, minor wave 4. So we're counting the last minor 5th wave up. Once minor 5 is done, it in turn will complete intermediate 5, primary 5, cycle 3. All right, so now inside of minor 5, what is it going to consist of? 5 waves of minute degree, 1, 2, 3, and I believe we are still in that minute 4th wave. So on that daily, I can open this up a little bit more, and we can see minute 1, minute 2, minute 3. Now I'm going to bring this down to my hourly chart, and that takes me inside where I can see minute wave 3 complete. Now, so we're still in a minute 4th wave. Now, bringing it up, if you're following me on a daily basis or even an intraday basis, I have been counting this minute 4th wave, which will consist of an A, B, C of minuette degree. So my degrees get smaller and smaller as we go along, but here we are. And so we have ABC down for wave A. We have ABC up now for wave B. And this is where I'm now beginning to update the daily picture because I had using the cash is how I've determined that we likely have completed this B wave. And part of that is because of the reaction that we started to get today. It just started to begin to sell off pretty quickly. And it got further down than I thought it should to still be within a internal fourth wave with another stronger fifth wave up to go, and which would have suggested that the SPX would likely go up and test 6,500. Now, I still believe that that's going to happen, but just not right now. So if this is correct, if the market did complete, so again, I'm leaving my Fibonacci out there. Again, for an irregular B wave, the Fibonacci sequence would be 1.236. So where wave B is 1.236 times the length of wave A, or 1.382, which is still above us. And I'm going to put it back on right now, but what I've been attempting to do right away is to show that the market hit it on the nose before we started to head lower. Now, again, this is the hourly chart. And we're going to go out to the 15-minute chart in a moment because what I believe we're doing is a 1, 2, and we're coming down in a 3. And that's just the first 5 down, to kick off this C wave. So what are the expectations of the C wave? Well, we should be getting 5 waves down of the sub-minuette level, because I'm looking for minuette wave C. It'll consist of 5 waves of sub-minuette level, and I believe we're just starting wave 1. So 1, 2, 3, 4, 5, wave 1, then a 2, then a 3, and a 4, and a 5. Now, what can we expect in terms of where our support's going to come in to complete this? Well, if I go back out again to that daily chart, what we already still have had in place for a long time is the Fibonacci support levels for a fourth wave. The most common is 0.382, a retracement of the third wave, so retracing it back down. And that comes in at 59.19. But above that, we have 0.236, which comes in at 61.13, 61.14. Now, taking it back to the hourly chart, how are we going to look at this? Because one of the things is this is an irregular B wave, which I believe it is, then what Elliott teaches us and continues to state, then the C wave should come in at 1.618 times the length of that A wave. So again, what does that do? That puts us down here. So we should have 5 waves down and finishing up around 61.30. Then we have that 0.236 at 61.14. So, and we already know that within the S&P 500, there has been and remains strong support at the 6,000 level. So, and I think that may build up 6,000 SPX. So if we were to put it down, 382 is 59.19, and we already can tell you at 6,000, there should be some strong support, and it should be remaining there right now. Now, let's take it a few steps further. We're going to come down in 5. We're just beginning, but what else I can add here is this initial decline just kind of built itself out kind of really quick. In fact, I have 1, 1, 2, 1, 2, 1, 2. It is just too big. So either I have to come up here to go 1, 2, 3, 4, 5, and then going to put a 1 here, and this is an ABC, and I'm going to put a 2 here of a smaller degree, and now we're starting back down in a third. And the third should pick up some steam and should easily break below 64.42, which again was the low today. Now, do we need to leave the door open for the possibility that this doesn't go further and we stop here and we pick up and we rally with strength come Monday morning? Yes, we do have to leave that open. We do have a major thing going on right now, and that is this discussion between the United States and Russia. So President Trump and Vladimir Putin to discuss peace in the Ukraine and whether that's going to be achieved or it's not, or even what's going to be laid out is the conditions for which either side will agree to, and then they can find peace. If we get peace in the Ukraine, if that war settles out, stops with all of what's going on, then I think we could have a strong rally. Just in a relief, it's done, it's over. And we'll see kind of what happens from there. So yes, I leave the door open that we could spike up as just a relief rally, but possibly not. I mean, there was particular reasons, and I think a lot of that could have been today was wrapped around expiration. Today was an expiration, not necessarily big, but we saw the NASDAQ really start to unwind yesterday. And part of that came from, as I read earlier this morning, that President Trump had come on and gave the possibility that semiconductors will be tariffed, will be charged a tariff of up to 300%. Now, I'm not sure why now, but the one stock that it hit pretty hard is AMAT, Applied Materials. What do? They supply a lot to the semiconductor sector in terms of how, for the chips, for the production of chips. So that took a real hard hit today. In fact, the stock had closed at a 188 prior to reporting the earnings yesterday. And then this news came on top of it because I wondered how and why this stock suddenly just tumbled $26. And it's because of that tariff that they will get hit with. So how that's going to sit now with China, with other countries, is yet to be determined. But it sent a very strong chill through the NASDAQ and I think through SMH. And we can just take a very quick look to see how that handled things today. And you can see it also just took a little bit of a nosedive. I'm likely based on the fact that AMAT, Applied Materials, carries a lot of weight over there. But we saw that NVIDIA had problems, managed to close at 180, which was probably just the expiration. So again, we might see another round of stronger move down as we start on Monday. And we might even see it begin with the Globex session on Sunday. So there's just two ways I'm kind of looking at this. We have no idea. I do not know what is going to come out of this discussion for peace in the Ukraine. Don't know. It could be negative. It could be positive. Either case is going to tell us what we might be expecting on Sunday. The tariffs, if they are going to be implemented, that's going to send a chill back through the market. Once we think we're getting a grip on what's going on with tariffs, we're getting now the threat of almost 300% tariffs. I was like, well, gee, that's not. Remember when we said it's like 145 against China? Now it's going to be 300 against semiconductors. So, again, I think it will have its effect. And therefore, based on those things together, I put an initial top in for the B wave, which is suggesting that we got a C wave down. And that kind of gives the market time to digest, react, to anything that's coming out right now, and then finishing the C wave, because again, what it sits on the other side, once we're done, and we come down, I don't need to do that. I can do it right on the hourly chart. Sorry about that. We come down, we do an A, the B, we come down in the C wave. I believe this is my target area for the whole C wave. That's my target. And so if we come down, it's not the end of the world, nor would it be the end of the rally. This would just be consolidation, a pullback, a wait and see type of mode. Take all of this off and pull it back in, and then start over on the next rally, which would be, right, if as soon as I finish minute wave 4, I still have a minute wave 5 back up, to go back up, to rally back up, and to, again, new all-time highs. Then we're dealing with that 6,500 to 6,600 up towards 7,000. Those all still remain valid signals or valid levels for our market. So, I mean, I could put one more in here. I do, and it's where is that 0.3, 3.618? Oh, it's all the way up here, 7,000. Yeah, I knew I had 65 and then 7,000. So those are just on the minor, right? Because what we're going to be finishing is minute wave 5 back up, and that in turn will finish minor wave 5, intermediate wave 5, primary wave 5, cycle wave 3. So it's a lot coming to a conclusion. And so this rally, that's kind of also what pushes the power of the rally, because we're finishing such a large move. And so it's kind of how it goes. So many times when we get to this type of a position, the market just is racing to get to that high. For various reasons, but here we have it. And so I'm thinking that there's no reason not to expect between 6,600 and 7,000, or even plus. I know I've seen some where they're talking even above that. But back to ground level right now, I think we need to do some consolidating and to move the market. The market will move lower, but I think consolidate and remain above, according to what my levels are telling me, 61. Or I think if there's some really stronger overthrow from this, and then I think I could put 2.618 on this level, and that, let's just see where that comes in. That's going to come in right there. We slipped back down to 5,900, which is the 382. So again, 0.236 coincides with 1.618, and that is for the C wave. And then we have 2.618 for the 382, which comes into 59, and the other one 59.20, and the other one 59.13. So we have these two clusters, and I think that is where we will contain this minute fourth wave. So now I always go and start and look at the moving averages on this level. Now, I had stated a while back that I was going to, no, that's not what I wanted. I need to go over here. I want to just do it now because I kept saying that I would do it. And we're going to go back to the 50. And so I've been using 78 because that's what's used out on, and then I want to go to, oh, that is the 20. So 20, the 50, the 8, the 20, the 50, and the 200. Good enough. All right, so here we have the 8, the 20, the 50, and the 200. And so those actually have not, they're starting to register because the 8 will start to go flat. This is the daily chart. So no harm, no foul yet. But I think things could pick up, and then we're looking for the 8 to break on all of these to start to turn. But initially, the 20 is going to go flat right about 63.60. The 50 is going to go flat about 62.25. The 200 will turn flat about 59.40. That's going to provide support. If we come flying down through it, then of course it's going to turn lower and it's going to follow the market. But I think the 200 will continue to provide a floor right about where it is. So I think again, when we're talking about levels, there's the first, there's the second, and we kind of get a little backup from the moving averages as well. Now, let's go over and take a look at the S&P, the futures market, the ES. So again, everything else remains the same. So I'm going to start here on the daily chart where we're in minor wave 5, and we have minute, and that's going to be 5 waves of minute degree, of which 1, 2, and 3 are complete. And now I can bring it down to that hourly chart. And I also cleaned up this chart, by the way. I took a lot of the internal count out because as I moved out and looked at things on a daily level, it gets very compacted in here and you can't see the chart. You only see just this congestion of color. And so I've kind of whittled it down. And so we have minute 1, minute 2, and then minute wave 3, and then 1, 2, 3, 4, 5 within it to show that minute wave 3 is 5 waves up. And then we have an ABC down for wave A, of minute wave 4. And then we have this rally back up. Now, another alternate that would go with both of our markets right now, and I've discussed it before, is that minute wave 4 could be complete right here. And what that now suggests that we're already in minute wave 5 and that it's underway. And then what would be happening here is that wave 5 would be forming a diagonal. Although I have a C wave that is 5 waves up. And therefore, I'm leaving it as the C and the B because it's not 3. It's not 3 up. And what worked for today that did not happen in the NASDAQ, but it happened here in the S&P, is that right at the opening, well, this happened overnight in the Globex session, whereas the SPX had happened within the first hour of trade today, that the market went up and made a new high above what it had done previously. Here we had 65.02, and then internally we had 65.08 coming up. And that, I believe, is enough to put that 5 in and the C and the B, because this really started to come off. You can see on that hourly chart, really started to come off. It's like 1, 2, 3, 4. We got another 5, and then I got 5 down. And it's going to be wave 1 of the first wave down. Or it can be all of wave 1. And then we have a 2, and then we have a big third. And so all C waves must be 5 waves. That's kind of the rule. And so that's what I'm going to be looking for here. I had the possibility that this third wave that I'm marking as the third wave here could have been an ABC all the way up, and then this would have been a larger 4, but that kind of squashed that idea. So again, I'm leaving it as an ABC, whereas in the NASDAQ, it's going to look a lot different. And again, I'll be getting to the NASDAQ when I'm done here. I'll go over and do the NASDAQ as well. But again, I'm feeling that we have finished that B wave. And the S&P did manage to get to an additional high above what it did on Wednesday. So this was PPI, this was CPI, this was PPI, and then the overnight it rallied. I can't really tell you. It's like, well, to hang your hat on this. This is the reason behind it, but it did, and therefore put in a new high, and then it gave me the opportunity for that 5th wave. This is not clean, but it is pretty vertical, and so I'm leaving it as a 5, the C and the B, and so we're starting on that C wave down now here as well. we have our first target. Well, this is going to be support. 100% where wave C is equal to wave A comes in at 62.78. I don't expect that that level is going to complete the the C wave. And the reason being is that it's an irregular, number one, and it falls outside of the flat family. So we're at least looking for it to come back to 62.39 or 62, yeah, 39 here. But if I put out 1.618, which is the more common for when you have an irregular B wave inside of an ABC, then you're going to be looking for 1.618. So that may provide a pause. It could be the completion point for possibly wave three. By then we're going to come down again. And there's my first line is right here, 61.55 down to 61.35. And then we have this one, 382. And all I need to do is add one more there. And we add the 2.1618. And that's 59.05. And this is 59.58 for the 382. Understanding that 6,021, 22, it'll be even lower as we move closer to September, because this is the September future. And so right now there's still premium in the ES. So I would imagine that the corresponding to 6,000 today it was 6,022. So we're going to look for like probably on Monday, it'll probably be down to 620, 6,020. And then as it gets lower, and it probably should start to equal that 6,000. And then, and still, I think would be support. So we're looking like right in there. We might get a little spike to bring it down, or it might just have that overflow. But this is my first target, second target. And, so we'd have to blow through this one to kind of give that one some weight, so to speak. Now, also here, today, for those that kind of follow me through and the spot gamma levels, we did see a lot going on in those today. And so it should be interesting. So early in, we got to 6,508 or 6,509. Now, the large gamma one in the call wall was at 6522, but 6472, right? So right towards, well, our close, but towards the early part of the day, we went down and we broke large gamma 2, which was at 6472. And then at 6467 was the volatility trigger. Look where it closed. 6467 is where it closed. This was early on. It broke through the volatility trigger, took it back, and then came back down and closed right at it. So that's going to be interesting as we come into Monday, because these will reset. They get reconfigured because today was an expiration. So a lot of this, the movement and where large gamma positions were sitting was due to this expiration. Now that all that gamma has expired, we will see the result. And I'm sure that things will start to spread out again as we start the next round. And that'll take us into September. And it could be an interesting month, by the way. So in any case, we're going to continue to watch to see where this volatility trigger comes in. And if it gets shifted lower, or if it remains where it is, and we start to break, it could add to the intensity of the selling. When we break back below a volatility trigger, it starts to signal risk off trading. So in other words, with risk off trading versus risk on trading, we've been in a risk on environment where we've seen that they're selling the VIX and they're taking that cash and they're buying the volatility of the underlying. And primarily that's been in Mag 7, which are all tech stocks. So that is what started to get hit kind of hard this week. And then yesterday and today. Really started to hit them pretty hard. And so we might see that continue, and with the volatility trigger. And also, it was an expiration of just a Friday expiration for all the underlying as well and the ETFs. So a lot comes off. We'll see how this all gets reconfigured on Monday. And the balance of this is that what we have is I'm going to go back out to, don't want to go back out to the daily. I want to talk about the moving averages here, pretty much the same. And so what we have, I just want to make sure, because if I change it on one, it changes it for all of them. Yep, 820, 5200, good deal. So there's the 8. So there's still, again, not any real strength or worry yet from moving averages. They're starting to maybe start to get flat. So, but the ones to watch now, as if we start to come down, we have the 20 is sitting at 63.93 approximately. So I think that as if we're going to flounder up here, and then 63.93 will start to go flat. So that 20 will start to go flat. This 50 will start to go flat just below that support, that fib support at 62.78. We'll have additional support if it stays flat at 62.58. Coming down here, the 200 sits above the 382. So we'll have support as this goes flat around that 59.70 level, and then we have that 59.60 for 0.382. So they begin to take a little bit of life and show that the possibility of getting down there and finding support there exists. All right. So again, haven't heard anything, but I'm sure we will. But we're going to have to wait till Sunday when Globex reopens to get any type of reaction from the market to this summit between Russia and the United States over peace in the Ukraine. All right. Our next update will be on Monday morning.